55% return on invested capital, 13% return on assets, and 30% return on equity. So if I had to pick one stock to buy today at today's valuations and what's going on in the world and wake up in 35 years, I think it would be Cisco. Now, I know this seems crazy, but this is a really solid company, and man, do I love the acquisition of Splunk. Splunk was one of my top growth stocks that I was looking to buy, and Cisco snatched it up for a substantial premium. Welcome back in YouTube. Today we're going to talk about a company that I believe is probably going to be one of the most important companies over the next 10 to 15 years. As we start rolling out AI, you're definitely going to want exposure to Cisco. Of the many things Cisco does, I want to focus in on security, collaboration, and cloud management. Now, they just acquired Splunk, and Splunk is going to complement this company extremely well. If you're not familiar with my channel, Splunk was one of my top growth stocks I was keeping an eye on, was looking to get in right around $70 a share. Never got the opportunity as Cisco scooped up this company for a $28 billion cash deal here. Now, this is just under 10 times their revenue, which is extremely rich, but over the long term, I think this is a great fit for Cisco, and I hope that the stock comes down because this is definitely one of the most interesting stocks long-term in my personal opinion. As we all know, cyber attacks have been picking up more and more, and this is definitely going to be on consumer cyber attacks along with business cyber attacks. The most recent one was MGM, which I'm sure most of you heard about, and this is going to cost the casino $100 million. Implementing something like Cisco Splunk combination, which could have prevented this, I'm sure was a lot cheaper than $100 million. And so the wildfire spread that's going to take place with cybersecurity for businesses and individuals, in my opinion, is going to lend an opportunity for a company like Cisco. Now, on this channel, what I want to do is break down as if this deal already took place. So taking out $28 billion of cash on Cisco's balance sheet, projecting out some growth rates, and getting what I think would be a fair market value for me personally. So we're going to do that together. Hopefully you guys enjoy and understand what I'm doing here. If you have any questions, obviously leave a comment down below and let me know. Now, in full transparency, before we get into the numbers, I do want to point out the fact that I did text message my friend Tom here, who's on the channel. He's currently in Italy, so hopefully, Tom, you're having a blast. But the minute that this deal went down, look at what we text messaged back and forth. That goes to show the conviction that I have in a company like Cisco and Splunk, and I think these two together could be an absolute juggernaut. Now, in the short term, I do think they really overspent on the acquisition, but in the long term, I think it's going to pay dividends, especially when we factor in what's been taking place with the macroeconomics here of cybersecurity being needed more than ever. And this is a company that was unprofitable, but we can see here that operating margins were starting to get very close to profitability. I think this is something that Cisco saw, that top line revenue was going bananas, that operating margins were actually starting to expand here, and the company was on the verge of profitability and possible cash flow. And so they see the high demand, they see the high growth rate, and it's complementary to their business automatically. And if they just put this business into their business model, I think it's an easy transition. They get margin expansion on the Splunk side. They get consistent top line growth. This could be a very powerful transaction, I think, for Cisco. And for Cisco, we see that they did have a nice spike in top line revenue, going from $49.3 billion to $49.8 billion. Not much growth between 2020 and 2021. But then we see some nice acceleration in the trailing 12 month here, doing nearly $57 billion of top line revenue. Now, analysts are expecting right around 6% growth over the next 5 years. We see Splunk in the trailing 12 month doing just under $4 billion of top line revenue. Now, my goal here is to project out 2024 earnings here. And so I'm projecting that Splunk is going to do right around $4 billion top line revenue growth. We add that to roughly the $60 billion of top line revenue growth that Cisco is doing, and that gets us a $64 billion of top line revenue for 2024. Now, if you have a copy of my DCF calculator, I'm going to explain how I kind of finagle the numbers here. So what I do, if you are trying to add an acquisition in, what I do is I fiddle around with 2022's revenue to project out 2024, 2025. In 2022, Cisco did $51 billion of revenue, but I want to get 2024 to be right around 64, 65 billion of Cisco's top line revenue with the acquisition of Splunk. So how I fixed that was I added a few $billion of 2022 revenue here, going from 51 to 55 billion. That allows me to project out what I think the company's going to do with the Splunk acquisition without putting growth rates astronomically high. And as you can see here, I got 2024 growth rate to be $63.5 billion. So I'm undershooting what I actually think they're going to do. Once again, just building some safety here. With those growth rates, we saw analysts expect between 6 to 7% growth. I'm not even going to change anything here. I'm going to keep it 7% growth, 5% growth, and 2% growth. Basically saying the acquisition of Splunk is just going to keep revenue on track to what they were projected to do anyway, but I'm just adding in that additional revenue, okay? So I'm not trying to say that they're going to do 10% revenue. I'm going to say they were projected to do 6. I think with the acquisition of Splunk, they can do right around 7. I'm also adding that Splunk revenue into 2024 projections, which gets us to $63 billion, which gets us to $63.5 billion rather than $60 billion. So you can see here that I'm fiddling around with the numbers to get my story that I'm telling out on paper and what the projection of that's going to be. Historically, the EBITDA margins for Cisco have been right around 30%. So I'm going to say early on, they're going to do 20%, middle years, they'll do 25%. And then by year 6 through 10, they'll get their EBITDA margins back to normal, right around 33%. Now, when we compare Cisco's valuation to their peers, tremendously undervalued even with the deal not being done here. How much cash am I earning as a shareholder versus the competitors here? Take a look at this. It's only trading at 10 to 11 times price to free cash flow, while sector median is nearly double that. So tremendously overlooked, tremendously undervalued type of stock here. And so now you have to ask yourself a question. Will there be multiple expansion and will price discovery happen with this company? They've been paying that dividend for 12 years and consecutively growing that dividend. So somebody who's a dividend growth investor definitely might want to look at this company as possibly an addition. And so the two projections I get here is $48.41 for a DCF model and a multiple of EV to EBITDA. I'm getting a $37 price target. So for me, right around $42 becomes extremely, extremely interesting. Even around $45, I'd be interested in the stock. So it does need to come down here. I actually thought it would most likely be a buy. So this is so important. This is a great example to why you should be running your analysis, because sometimes even just looking at surface level things, I could be overpaying for this company. So now I have to ask myself the question, what are the odds that it actually gets to that $40 to $45 price target? And we can see here that in the 52-week range, it hit $38 a share, and it's traded between $38 to $58 a share, currently trading to. So does that mean that there's possibly an opportunity to get this cheaper? And I think the answer is yes. On a substantial market pullback, we get some bad news, some sentiment here. We could see this absolutely sell off to the $30 to $40 range and hit my price target. And that's exactly where I'd be very, very interested in Cisco as a very long-term buy with a tremendous amount of upside in my personal opinion. I'm really undershooting the growth aspect here. I honestly think we could be using high single-digit growth rates. And if we do plug in high single-digit growth rates, what does that look like? Well, at that point in time, it's basically a buy between $45 and $50 a share. And so this is where we can see if the company beats expectations on the growth and the addition of Splunk, they can absolutely deserve the price that they're actually trading for today. So very interesting acquisition. I actually think it's a phenomenal acquisition. And the more acquisitions that are made like this, I think the stronger that this company will be longer term, even though the market doesn't like the deal in the short term. I definitely think this is a great addition. 55% return on invested capital, 13% return on assets, and 30% return on equity. So they are very, very efficient with where they deploy money, which actually confirms that this is probably a better buy than I'm even anticipating here. So just to give you guys an idea, I would need it to fall basically 15-20% down, but I would actually understand reaching at these levels if you believe they're going to exceed the expectations of growth. So depending on how you value the company, that's what exactly I would be looking at. As always, guys, hopefully you enjoyed this dive into Cisco Splunk deal. To me, I definitely think it's a game changer. I think the macro backdrop actually supports sufficient growth opportunity for a long term for Cisco. So yeah, as always, appreciate your time. Thank you so much for spending it with me, and we will see you in the next one. Peace.